Hi guys, welcome to this week's episode of Global News Review. Guess what? Your shipment from Amazon is about to get cheaper. There are interesting opportunities going up in other states in Nigeria that you need to find out about. And what else? Somebody became the richest man in the world overnight due to some deals with OpenAI. So let's talk about it now. Welcome, just in case you don't know, my name is Ola, and every week, every Saturday morning, West African time, 9 a.m., I talk about global news, how it affects your pocket, and what you should be doing about it. So stick around if that is your tea, right? And of course, say hi. I can see people that are listening in live. So say hi, let's know where you're reaching out from, and we'll be sure to spotlight you. Thank you. Now, let's get to it, right? We have news from around the world. The most interesting news that came out this week was around Oracle. Now, if you know Oracle, Oracle is like the oldie in the tech space, right? Oracle is that person that you see, like if you remember the old interfaces that we had that year, that was Oracle. Now, Oracle came into the news this week because they signed a 5-year contract with OpenAI, and not just OpenAI, with Meta and other companies, right? They signed a contract or contracts, right, for cloud servers, right? To the tune of, I mean, let me say to the tune, but the impact on that revenue is that your revenue is going to go from 10 billion annually as of last year to 144 billion in 2030. And 2030 is like 5 years away. That is wild. And so when the market headed long and short, the stock price moved by like 36%. What that means in simple terms is that if you put $1,000 in that stock, you would have had 1,300 by the end of the day. That's what happened. So wild. Of course, on the back of that, because this big boy called Ellison, who's the owner, who's the majority shareholder, because the stock prices jumped up, he also jumped up in his valuation, and then he knocked out Mr. Elon in the way. Now, what is all this about? Basically, what Oracle and what the markets are jumping at is basically taking a bet on artificial intelligence and the impact it's going to have on the world in the next 5 years. Now, fun fact, right? This contract that OpenAI, like the biggest contract with OpenAI, the contract that OpenAI signed with them, the amount they will be paying is their current annual revenue is one fifth of the amount they'll be paying. What that means is that if OpenAI does not blow, nothing for anybody. Oh. Why am I saying that? It's also important. Like we see this news, markets respond. Understand that the markets, they are traders and they will trade, and that's their job. And the news is good news because signing a contract is as good as the deal being done. But if the person that you signed that contract with files for bankruptcy, that's the end. Do you understand? So basically, Oracle is taking a gamble that artificial intelligence is going to blow up and monetize in the next 5 years. OpenAI is taking a gamble that because of that blowing, they're going to make so much money that they'll be able to afford to pay Oracle this amount of money. And the markets are banking on the fact that once OpenAI does what they're supposed to do and Oracle does what they're supposed to do, this stock is going to go to heaven. Now, for you as an investor, I'll say thread carefully. We know that the AI space is unraveling so quickly. And one of the things that we need to highlight about AI is the fact that monetization is not entirely clear. What do I mean by that? Remember the whole DeepSeek thing. There's some features in OpenAI in ChatGPT that you couldn't access directly, right? Until DeepSeek came and they're like, oh, let's leave this thing open for people, and they couldn't charge for it anymore. So the way AI is like spinning off itself, monetizing it in itself might not be like a straight road. So if these things are hinged on monetizing artificial intelligence, then you have to tread carefully. So whilst it is fantastic for Oracle, while it's fantastic for Larry Ellison, as an individual, it's good news in that direction. Play a little into it, but be careful. That's my highlight on that. And then moving on to the next news. I mean, if you're okay, I see more people say hi. Okay. Hi, Jujisco. Always happy to see you here. Thank you so much. Um, so Nigeria news. Now, Nigeria news is I have two news out of Nigeria. The first one is about Oyo State. Now, We know that if we're talking about like the state for trade, blah blah blah, everybody just thinks Lagos, right? But Oyo State is actually making gains, like they're taking grounds and they're using what they have to get what they want. Now, what's happening in Oyo State? Oyo State is they actually signed an implementation strategy document for the Africa Continental Free Trade Agreement. Now, why is this important? Number one, you know that one of the reasons why Lagos is so overpopulated and so stretched and so strained is because if you want to make it big at scale and you want it, do you get there? So much is happening. There's a lot of trade, a lot of transactions, right? And Lagos is positioned for that. Airports, blah blah blah. Positioned for that. But the real issue is that there are very few other states that are positioned like that, if at all, such that any state that is able to position themselves effectively using laws, policies, blah, 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 is going to take off. Why? Because who's not really tired of all this stress in Lagos, if you get what I mean? So think about the UK, where there's a London, but there's also a Manchester. You understand? There's also a Liverpool, there's also Birmingham. They might not be as gish gish as London, but they are still thriving. You can make there's it's like a city type ish thingy, ish being the key word here, right? But we get that idea. So Oyo State signed this agreement, and for them, why is this good? Jobs, trade is what creates jobs. So if in case you don't know, so they're going to be, so the expectation, let me use that word, is that more jobs will open up, international trade, people being able to export. Oyo is great on mining, right? So just being able to fine tune and finalize on that to push it out at scale is fantastic. However, it is easy to sign paper, but the people need to be upskilled to meet up with international standard, and not just international standard once, but to standardize their product and delivery at scale consistently. So there's work that needs to be done in terms of upskilling and upscaling the Oyo people, right? So that for me is where there might be that back and forth. But the fact is that before you can grow, if you don't know, policy is what drives growth, right? Policy is what drives growth. So if you are not aware, this policy is major. Implementation will always have to follow given, but this policy is major and we should look out for it. So if you are from Oyo, real estate, what can you do in the mining area? What are the things that we know of ladies? Shipping. So basically, the news is that they have set a $300 um, free free tax mark, meaning that if you are investing or if you are buying stuff that is worth less than $300, you won't need to pay duty on it. Now, if you've ever tried to order anything on Amazon to ship to Nigeria, you see like the shipping that you now see the tax. The tax is always what throws you off. So the item must really make sense in terms of cost for you to be worth paying that amount of money for taxes. So there are all those little things that you just sharply order. You can't, or you won't because the numbers don't add up. Now, what this is saying is that if the value of that item is less than $300, it is going to be duty free. That is good news. Now, what does that mean for you? If you had that thing that you see that, oh, it's so expensive, but it's not available here, but it'd be quite useful in Nigeria, and you'd have loved to import it, but the math ain't mathing, because by the time it comes here, you add the shipping, add the duty, the cost doesn't make any sense. This is a time to revisit it. It's as simple as that. Now, for us in the club, oh, I forgot to even mention, yes, and this also applies here for us in the club. Oh, if you don't know, Power by the Money Me Club, yeah, we can find out about us. I'll put the links up somewhere or the other. But we're talking about it in the club this week, where there were some announcements, right, from about nine post and stuff, and we're okay, who knows what, who can we call, blah blah blah, right, to get into it. But the idea is that a lot of things are happening that pose as opportunities if you see it as such, right? And guess what? If you see it as such, but you don't take action, it's as good as not being an opportunity, if you get what I mean. So, long and short, think from that angle. What can you do? What is available that you can ride on and draw value and create value for yourself and society at the same time, right? There's a lot of that happening right now. And just also important to highlight, I just realized I didn't mention. So we have a financial planning workshop coming up at the end of this month on 27th of September. Now, this workshop is for you if you are um, working, making money, but you are not sure. There's a lot of not sure about what you are doing. You can't say categorically that I have a plan to get myself to this. Now, is it possible to have that plan? Yes, it is. Does it mean that the wind will not blow? No, it doesn't mean that the wind will not blow. But you are better off having a plan than not having one. One. Number two, at work, you create those strategy documents, you implement, you think about the risk mitigants, you position yourself, and somehow or the other you meet it. Right? So why do you think it will work at work? And somehow or the other, you shouldn't have a plan for your finances. Why is your finances or why are your finances a random walk? If you don't know why it is, there's a problem. If you don't know how to fix that random walk, there's also a problem. This workshop is for you. I'll try and put testimonials at the end of the session, right? Just for you to get a vibe. And if people have signed in from America, from the UK, from Canada, Nigeria, obviously, right? Working class people, business owners, right? This is the fourth cohort, right? There's a 25% discount off. Let me just put the barcode. You can check it up and find out more. It's tagged Beat the Odds because the odds are generally not in anyone's favor, except if you are like, in fact, I was about to say generational money, but generational money data shows that two generations down, money has gone. So the odds are not necessarily in anybody's favor because inflation is so diligent in doing its work, right? So if you are struggling with your finances, I recommend that you check that out. The barcode, I just popped up the barcode on the screen. You can check that out. The links will also be in the description going forward. So moving on to the last news for today. African news. I thought this was also interesting. And I dare say that across Africa, there's so much happening. There is so much happening. And that's because Europe, for example, is overflowed. There's no creativity. Like, apart from AI, right? What is the new thing coming out of America? What is the new thing coming out of Europe in terms of creativity, right? What can, when I say what's the new thing, I mean, what new thing can you take to Europe and say, come and buy, right? The only things you can take are things made in Africa, African clothes, African bags, shea butter. Why? Because they don't have those things and they've not seen it is new, right? So there's a lot coming out of Africa because we hadn't carried ourselves to the world before now, right? So this is an opportunity for the world to see what we have. So even if you are not living in Nigeria and but or living in Africa and you are African, think about something that you can take from Africa and send to the world because the world is looking for something new and we have a lot of that. That being said, very, very interesting to find out that there was actually a law that was established in 1950 in Egypt that put a cap on rent. Can you just imagine you own a property, you are letting it out, and they say that the maximum rent you can charge is $1 for 50 years. That is so wild. Why did they do it? They did it because they wanted equity, equality, let's make sure that people are not choked, all those nice, nice things. But fast forward to 2025, what have we found? Right? We found that, was it 915? I think it was 1975, it was 50 years. Yeah, 50 years. So 1975. So what we found was that because there was no incentive to maintain those buildings, because it wasn't profitable to manage those buildings anymore, a lot of buildings in Cairo are run down, just looking somehow, because why am I investing so much when all I'm getting is $1? Now think about it in a 50-year period. Now, the courts have ruled that that needs to change. So there is some sort of dilemma. There's a human side of things where if you've been living in this place for 50 years and you started living there at 10, you are 60. If you are the one paying the rent, then you are probably somewhere between 70 and 80, if you understand what I mean. Now, how do you want to move those people out of those places to where? That is a social issue. But on the other hand, for the property owners, there's now looking like an incentive for me to actually own a property, maintain it, blah, 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 right? So there is that dilemma. It's both social and capitalist at the same time because if you dwell too much on the capitalist side, there'll be protests, right? And not just will there be protests, there will be people living on the street, the social issues that come with it. So Egypt is in a place where something needs to give, or something, there's a balance that needs to be found. However, I dare say that once they're able to successfully navigate it, then the real estate market in Egypt is going to start going up. So I'm seeing the opportunity. I'm talking about the challenge, but I'm also saying that there's an opportunity here. For us in the club, we have structured investments in Nairobi. The people that bought into those properties are in the US, they're in Canada, they're in UK, they're in Nigeria, right? Members of the club, individuals owning property in Nairobi, legal documents, everything sorted out. That is the same way we can do something in Nairobi, in Cairo, or in Egypt. To find a good place, location, blah, blah, blah. What is the attraction? Because Egypt is trying to open up. So think about it. When you see these challenges in the news, that's what this session is for. Don't just see them as challenges. What are the opportunities you can draw out of them? That's the idea. And the final news. Oh yes, EcoBank requests note holders approval for 875 million debt arrangement. So basically, I just wanted to highlight this because sometimes you see this thing in the news and you're like, what are these people talking about? Are they defaulting? Are they not defaulting? If they're not defaulting, what's all this? But like, I'm a bonds person. I started my career as a bonds trader. So whenever I see bonds, I'm like, what's happening here? So I actually went to read up on it. What are they saying? So because EcoBank, Eco Transnational, it's a Pan-African bank, and it's across different countries, of course, Pan-African. So they need to streamline some of their documentation across different countries, requirements, blah, blah, blah. So they are seeking approval from note holders. That means note holders, if you don't know, are the people that are holding their bonds. They issued euro bonds, and they are investors that hold those bonds. So you are taking approvals from them, right? To make those changes, right? And they are actually incentivizing them to make those changes. So if you approve by this time, you get a certain amount of money. If you approve by a certain amount of time, you get this amount of money and all that. But basically, they're just trying to streamline. I thought it's quite interesting, right? Because these are the changes. This is how, like, when it comes to investing, you don't see everything from the start, right? But sometimes it might be agnostic or neutral, but sometimes it could be, oh, there's an issue. But I just wanted to highlight and also explain what they're doing, just in case you saw that mail and you're like, hey, is there a problem? So they have clearly stated that it's not about defaulting, it's not about renegotiating the terms of the coupon being the interest rate. Is not about any of that. It's just that they have some terms that they need to streamline across reporting countries, right? So that's what it is. If you are a Eurobond note holder, an ETI Eurobond holder, that is for you. And of course, if you're not a Eurobond holder, why are you not? Even if you don't have money to $200,000 to buy a Eurobond, you can buy a buy into a Eurobond fund and have access to it. Yeah. And if you're in the Money Weight Club, you can actually buy Eurobonds. Yeah. So why are you not taking action? Um, I hope this was useful. Don't forget that you can't outsource your health and your finances. You always have to engage. Don't forget to also check us out on the Bid the Odds Financial Planning Workshop. Follow us on social media. Let me put up my handles, our handles and all that. I don't mention it as much as I should. And see you next week. Bye.